Okay, the question here from Sipukazi Mbata is how do we do an asset exchange account? An asset exchange account. So I'm going to use question 7 from the property, plant and equipment handout. I've just copied it to various. Let me just have a look here now. I can't answer that now. I've just copied it to a blank document, and then we are going to work through that. Okay, so let me just go and share that document. Now, which one? I've got so many open. I want this blank document. It's not blank anymore. I've now copied a few things in there. Okay, so let's have a look at this question, and then we're going to discuss the various principles with regards to an asset exchange. And then if there are any questions while we are doing this, then you are welcome to ask it yourself. You are obviously welcome to type any questions in the chat box as well. So this is now question 7. It's in the PPE handout that you will find under content. And then I think the subfolder is called, I think it's called notes and question banks. Yes, notes and question banks. So anyway, question 7 there. So let's have a look at this. It states there, okay, let's maybe just first see what is required of us. I haven't got it, isn't a separate, there we go. Show the asset exchange account on the 30th of June 2009. Sipukazi, that is your question, isn't it? The asset exchange account? Okay, thank you. Right. So the asset exchange account. So let's go and read through the question, and then before we actually answer the question, I just want us to go through the basic principles as well. So I've got a question here. I've just created a blank journal sheet here, and I've created a blank asset exchange account here, and then we can fill it in as we carry on. So let's start by reading the main part of the question. They say on the 1st of January 2008, a company bought a new Volkswagen Navara for 180,000 rands. The useful life of the vehicle is 8 years with a residual value of 24,000 rands. Then they say on the 30th of June 2009, the Volkswagen was exchanged. So the Volkswagen that we already own was exchanged for a Nissan delivery van. So we are going to use the Volkswagen Navara that we already own as full or partial payment of purchasing or acquiring the Nissan delivery van. They say the company had to pay in an extra 650,000 rands on the deal. No fair values are known for the vehicles exchanged. And then they say required, show the asset exchange account on the 30th of June 2009. Now, before we answer that, ladies and gents, I see we are quite a number of us here. Let us just go through the basic principles of an asset exchange. When it comes to an asset exchange, from an accounting perspective, that basically involves 6 steps. I'm going to type there 6 steps. The first 2 of the 6 steps you do not actually find in any of the financial accounting 2 question on asset exchanges. I just want to give you the complete picture. But it is really steps 3, 4, 5, and 6 that you will find in financial accounting 2 questions. So when it comes to an asset, and you'll see why just now, when it comes to an asset exchange, it is almost like when you are going to replace a significant part, then your first step will be to bring the depreciation up to date, right? Just like we had with the replacement of a part. The second step would then be calculate and record the impairment loss. If there is one. Okay, so those first two steps, like I say, you normally do not get that in an asset exchange question in financial accounting 2, because they always give you the carrying amount at the date of the exchange. So those two steps would have already been done. So the depreciation would already be up to date. If there's any impairment loss, it would have been calculated already, and it would have been recorded already. So the next 4 steps are the ones that we now have to go and do when it comes to an asset exchange. So the next step then, which would be our first step, is to recognize the new asset, right? Recognize the new asset. Then thereafter, perhaps you can type for me there. What must we do next? After we've recognized the new asset, I'd like to hear your opinion. What must we do? We're recognizing an asset that we are acquiring, but at the same time, you must now remember this is an asset exchange. We're giving up one asset, and we're also acquiring an asset in the same transaction. So besides recognizing the new asset, what else must we have to go and do? If someone can type for me there, please. Take a chance. Remember, we're exchanging assets at the same time, during the same transaction, we're acquiring a new asset and we are disposing of another asset. That takes place simultaneously. So besides recognizing the new asset, what must we also now go and do? Anyone wants to try something? Okay, doesn't look like it. You now have to go and recognize the old asset, right? Now must go and de-recognize the old asset. So that is our next step. The step thereafter is to record the movement of cash. Record the movement of cash. So if you are in on the deal, that means you are going to credit your bank account. If you receive money during the course of this deal, you are going to debit your bank account, right? So that is the fifth step. And then the sixth step is to calculate and record any profit or loss on the exchange of assets. Okay, so those are the 6 steps that we have to follow. Now, like I've said earlier, I'm just going to repeat it again. The first 2 steps will normally not be required in an asset exchange, simply because they are going to provide you with the updated carrying amount on the date of the exchange, right? So now let's go and start with the third one, recognize the new asset. And I'd like us to do the journal entry first. I want us to do the journal entries, and then we'll do the asset exchange account so that we can do both of them, right? So recognize the new asset. So what is the new asset? If you look at this question here, what is the new asset? Please type for me there. Anyone who doesn't need to be, doesn't specifically need to be CPUT. Anyone type for me there. What is the new asset? Thank you, Landela. Yes, it is. The Navara. Let me just read that again. The Navara is the one that the company bought. Remember, the Navara was purchased on the 1st of January 2008. So that was some time ago. let me just maybe go through that. So the Volkswagen Navara was already purchased on the 1st of January 2008. So that was a year and a half ago. So now we are at the 30th of June 2009. So this is now 18 months later. And they say that Volkswagen Navara was now exchanged for a Nissan delivery van. Thank you, Asanda. Yes. Okay, I know what you're saying, Landela. Yes, it was originally purchased as new, but now what happens now is, like Asanda states there, now we are going to acquire a Nissan delivery van, and we are going to use the old Volkswagen Navara as partial payment for acquiring that Nissan delivery van. Okay, so if we are now going to, you got it. Thank you, Landela. Yes, I can absolutely understand if you just read the first sentence, why one can think that you have to actually read the whole question to see the exchange takes place 18 months later. Okay, so now we've got to go and recognize the new asset. So what description are we going to start the name of this account? Let's maybe give it the full name. Let me just start the dates there. So this is 2009. This is June, and this is the 30th. Let's give it a full name there, right? You can be a little bit creative, but let's call it the full name. So the name of the asset is a Nissan delivery van, right? Nissan delivery van. Is that enough description, or should we add something? Just tell me yes, it's enough, or no, we should add something. Remember now, we must also go and indicate what does this account contain. We must add something. Quite correct. Thank you. Yes, we must go and add something. And what must we add? We must add what the account contains. So in this case, what will this account contain? The cost. There you go. Wow, you are awake. Yes, there we go. Okay, so it'll contain. So let us go and complete the name of that account. So we're going to type and we're going to say cost. Now the big question here is how are we going to determine the cost of this new Nissan delivery van? Now you must think back quite a few weeks. 3 or 4 weeks ago, we discussed what is the cost of an asset. And you remember we said that in the case of the cost of an asset, it consists of 3 possibilities. It consists of the purchase price, right? You remember that? And it will consist of any directly attributable cost, and it will also consist of certain future cost. Now, in this particular question, there is no mention of any directly attributable cost. There is no mention of any certain future cost. So the only thing that we now need to go and determine is the purchase price, right? The purchase price. Now, I wonder if you remember this. When we discussed the purchase price, what did we say? I know it's a little bit of a simplification, but what do we mean by the purchase price? How do we determine the purchase price? I'm going to give you a little while to type something for me there. What do we mean by the purchase price? The purchase price is basically what we pay for it, right? The purchase price is what we pay for it. Now, ladies and gentlemen, can we determine in this question as it stands, and I want you to specifically look at that last sentence where it says no fair values are known for the vehicles exchanged. So we do not know what the fair value of the Volkswagen Nivara is, and we also do not know what the fair value of the Nissan delivery van is. So now you remember we are using the Volkswagen Navara as partial payment for this particular acquisition for the Nissan delivery van. But we do not know what the fair value of the Volkswagen Navara is. So can we then stay with our basic principle of determining the purchase price as what we pay for it if we do not know what we're actually paying for it? Yes or no? Yes or no? No, thank you, Supercars. We do not know what we pay for it because we do not know the fair value of the Volkswagen Navara. So then, if we cannot determine the purchase price by what we pay for it, then we go to the next possibility. Uh, the next possibility, if we do not know what the fair value is of the asset that we are giving up in order to determine what we are paying for it, then we recognize the new asset at the fair value of the asset that we are acquiring. But do we know the fair value of that asset? Yes or no? The one that we are now acquiring, the Nissan delivery van, do we know that fair value? Correct. Also, we do not know that fair value. So we know neither fair values. So that means we have to go to our third possibility. And our third possibility is to determine the cost of this asset that we are acquiring by using the what of the asset that we are giving up. This is an estimation then of its fair value. Then we don't know what the fair value is, but we are going to estimate the fair value. And what is the best way that, or the best figure that we can use as an estimate of the fair value of that Volkswagen Navara? It's what? What would be the best estimate of its fair value? Something that we have in our books, at least we think this is very close to the fair value. It's carrying amount, not the 180,000. Remember, the 180,000 is that is what we purchased it for initially on the 1st of January 2008. But where are we now? We are now on the 30th of June 2009. So we must now go and take the depreciation into account. So we must go and take the depreciation into account to determine what is the carrying amount. So we are looking at the carrying amount of this Volkswagen Navara on the 30th of June 2006. So let's maybe go and calculate that. I hope you have a calculator with you. I haven't got one with me. I can open the one on the computer, but let us just go and have a look. Let's see. So the cost of that Volkswagen Navara was 180,000 rand. So let me just type it here at the bottom. Cost was 180,000. Right. What is the residual value? The residual value is 24,000 rands. Right. 24,000 rand. So what does that give us? 156,000. I think. Let me just check. You will probably help me out. Yeah. Thank you. 156,000. Okay. So the carrying amount is 156,000. That is the carrying amount, right?
Yes.
Not the carrying amount, the depreciable amount. The depreciable amount, sorry.
Amount. Oh, so you said depreciable amount. Okay, depreciable amount. Okay.
That is our depreciable amount, 156,000. So let me just type that at the bottom as well. Put an extra space there. No, didn't have an extra space. So 156,000, which is our depreciable amount. Over how many years are we going to depreciate it? Let's
8
have
years.
8 years. There we
8
go.
years.
Thank you. So the useful life is 8 years. So we're going to depreciate it over 8 years. So divide by 8. What does that give us? So that will now give us our annual depreciation. What does that give us?
19,500.
19,500. Just say again.
19,500.
Oh, I see you typed it there as well. 19,500. Thank you. And I've heard it as well. 19,500. 19,500. Okay, so let me, that is the, maybe I should just type that there. That is the annual depreciation. The annual depreciation. Okay, so 19,500 per year. So for how many years must we now go and depreciate it? How many years must we go and depreciate it? Remember, we acquired this on the 1st of January 2008. So we must go and depreciate it for the full 2008 year. You agree? The full 2008 year. And then we did this exchange on the 30th of June 2009. 30th of June 2009. So for how many years must we go and depreciate it? This is another half year. So for the whole 2008 year, and then for a further 6 months or half a year during 2009. So for how many years must we go and depreciate it in total? One year, 6 months. There we go. So we can basically say for 1.5 years, right? 1 year, 6 months, quite correct. So that will give us 1.5 years times 1.5. So how much would that be? You can just help me out there, please. 19,500 per annum for 1.5 years. 29250. 29250. Thank you. So that is 29250. Okay, so now we've got to go and determine the carrying amount on that date that the asset exchange has taken place. So what is going to be the carrying amount? It is going to be the cost of 180,000 rands minus the accumulated depreciation. Remember, we've accumulated depreciation now, 19,000 rands for the previous year and half of 19,000 rands for this current year. That is what gave us the 29,250. So 29,250. So our carrying amount, if you can help me out again there, please. $157.50, is it? Thank you. So the carrying amount of the vehicle that we are giving up, that we are going to use as partial payment for this, for the acquisition of this new asset, is 150,750. Okay. So, ladies and gentlemen, what we have done now, just to summarize, we haven't got the fair value. The first step that we would have done is to see whether we can determine the purchase price by what we pay for it. But in order for us to do that, we need the fair value of the vehicle that we are giving up, which is the Volkswagen Navara, but we haven't got that. The second possibility is, if we do not have that fair value, is then to use the fair value of the asset that we are now acquiring, which is this Nissan delivery van. But now we haven't got that fair value either. Right, so we've got a bit of a problem. So our third possibility, that the only other way that we can go about this is to go and estimate the fair value of that Volkswagen Navara. And because the fair value isn't actually known, we have to estimate it. And the best way that we can estimate it is to use its carrying amount, because that is really the reason why we've depreciated it like we've done, is to estimate the fair value through depreciation. So therefore, our carrying amount is the best possible way that we can then estimate the fair value of that Volkswagen Navara. Okay. Now remember, ladies and gentlemen, there's something we've got to remember now. What are we using as payment for that new asset? What are we using? We are basically making two payments. The first payment that we are making is by using the value of the Navara, right? By using the value of the Navara, but we're making a second payment. What is that second payment? Maybe I'll just change all my fonts here. It's a bit bigger. Okay, so I wanted to make that bigger as well. Okay, so we are using the value of the Navara. We're using that as a payment, and we're also paying in cash, right? So those are the two payments that we are making. So if we look at the value of the Navara, what is its value? We've just determined that, or we estimated that as 150,750, right? And then, ladies and gents, what is the amount of cash that we are paying in? What is the amount of cash that we are paying in on this deal? 6,250. So 6,250. 6,250. Right, so those are the two amounts that we are actually paying in. So if we add them together, what do we get? What do we get? 1,5. Let me just have a look at what you've typed there. 157,000. Thank you, Landela. So let me just type it in there. So our total payments that we made is to the value of 157,000 rands, right? So that basically is how we are going to determine the cost of this new asset that we are acquiring. Does that make sense? Does that make sense, students? So that is how we determine. Thank you, Takino. So that is how we determine the cost of the asset. So now let's go and complete our journal entry. Not complete, but the first leg of the journal entry. So we are saying the cost is 157,000. So let's go and complete that first leg of the journal entry. 157,000 rands, right? Okay, so that is our first entry that we need. So what have we done now? If we look at our basic principles again, we have brought the depreciation up to date. They didn't require us to do an entry for that, but we still needed to bring the depreciation up to date. If obviously they required that entry as well, we would have debited depreciation on motor vehicles, and we would have credited the account that we would then have credited would have been Nissan delivery vehicle, delivery van, accumulated depreciation. Right. So that is the steps that we've already done. And now we've also done step 3. We've recognized the new asset. So the next step that we must go and do is to de-recognize the old asset. Right, so now we've got to go and de-recognize the old asset. The old asset being the Navara. What was that first one? The one is the Nissan, the other one is the Volkswagen Navara. So let's go and de-recognize that. So that will also be on June 30th, same day. Okay, now the derecognition process, ladies and gents. We know we must go and get rid of any balance that relates to that old asset. How many accounts do we have with balances that relate to the carrying amount of that old asset? How many accounts do we have that relate to they combine to give us the carrying amount? If you can type for me there, please. Can someone type for me there? How many different accounts do we have that carry the amount that carries the carrying amount of that asset? Correct. Yes, we've got 2 accounts, and those 2 accounts contain 2 different aspects. Thank you. Yes, they contain 2 different aspects. The one contains the what? If you can type for me there, one of the accounts contains the what of that asset. The cost. Thank you. The one contains the cost, and the other account contains the uh, uh, accumulated depreciation. There we go. So both of those accounts carry a value that combine to give us the carrying amount of this old asset. So now because we are going to use this old asset as partial payment for the new asset, it means we are no longer going to own it. So we must now go and get rid of any balance that contains that has anything that carries the value of the old asset. Now let me ask you a few questions here. In the case of the cost account, does that carry a debit or a credit balance as it stands? Before we record the exchange entries, as it stands, the cost, does it carry a debit or a credit balance? Have I got you stumped? It's an asset, remember? So the cost of the asset will have what kind of balance, debit or credit?
Debit.
Debit. Thank you. Thank you. You typed it and you said it. Good. So I can hear it and I can see it. Yes, it has a debit balance. Thank you also, Landela. Now, if you want to get rid, debit balance. If you want to get rid of that debit balance, what do you have to go and do with that account now? You have to go and what it? If you want to get rid of a debit balance, what do you have to go and do with the account? Credit. Thank you, Mshlanga. Now you've got to go and credit that account. So let's go and do that. So let me use that space there. So it's going to be, let's just call it Nissan. No, this is now the new one. What was the old one again? It was a Navara, Volkswagen Navara. And that contains a cost. So now we want to go and credit the cost, right? We want to go and credit the cost. We want to get rid of that balance. So what is the balance on that account? If you look at that question there, what is the balance currently residing on that account that contains the cost? What is the balance on that account? When we purchased it, what did we capitalize as the cost of that original Volkswagen Navara? 180,000. Thank you, Zuki. Thank you, CPUT. So that means that is still the balance that is on that account, and we now want to get rid of that account. So we've got to go and credit that with 180,000 rands. Right. We've got to go and credit that account. Just make that a bit larger. Got to go and credit that account. Then when it comes to the accumulated depreciation, the account that contains the accumulated depreciation, as it stands now before we do the exchange, does it have a credit or a debit balance? As it stands, the accumulated depreciation, does it have a debit or a credit balance? Type for me there. Remember, this is now the contra to the cost. And we've said that, thank you, Mhlanga, yes. So as it stands, it has a credit balance. Now we want to go and get rid of that credit balance. So what do we have to do with that account now? Debit or credit it? Now we've got to go and debit it, all of you. Thank you. Thank you. You've all got that correct. So now we've got to go and debit that account. So let's go and do that. That account's name will be something like this, or it could just have been motor vehicles in general. It depends, it all depends. In the old days, when we still had manual general ledgers, then we would have just had an account called motor vehicles. But nowadays that all the accounts are on computer, it's very easy. If you use Pastel or Acfin or any of those accounting packages, SAP, then you simply create a ledger accounts for each of those high value items, right? So it doesn't matter if you've got thousands of those accounts because it's all computerized. It's very easy to manage. So this account will in all probability have been called Volkswagen Navara. What does this account contain? The accumulated depreciation. The accumulated depreciation. Just make that so that it doesn't look too awkward. So you're going to debit the account that contains the credit balance. What is the balance on that account as it stands? Remember, we've depreciated it there for the full 2008 year, and we've depreciated it for the first half of the 2009 year. Let's go and have a look at our workings. So how much did we depreciate it by until the date of this exchange? We depreciated in total 19,500 in the 2008 year, and by half of that in the 2009 year, because it was half the year. So the balance on the accumulated depreciation account as it stands now is that one, right? 29,250. 29,250. 29,250. So now once we've debited that account with the balance that was on it, it means the account balance is now zero, right? It is now zero. Let me pause for a little while there. Is that clear so far, ladies and gents? So there, after we've brought the depreciation up to date, after we've calculated any impairment loss which there wasn't, there was only the depreciation that we had to get up to date. Then our what we refer to as our first step then would have been to recognize the new asset. Then we have now de-recognized the old asset. So what is our next step? Let's have a look. What is our next step? We've recognized the new asset. We've de-recognized the old asset. What must we now go and do? Number 5 there, we must now go and record the movement of cash. Record the movement of cash. So if you look at that sentence there, who paid in? Did we pay in or did we get out? Just type for me, we paid in or we got out? Paid in or got out the money? Did we pay money in or did we get money out? We paid in, thank you, Zuki. We paid in, thank you, Sipukazi. We've paid money in. So if we paid money in, if we make a payment from our bank account, are we going to debit or credit the bank account? Credit, thank you, Landela. Yes. So then it means we are going to credit the bank account. Money is going to be leaving our bank account, so we've got to go and credit the bank account. So let me type it in the next block there. I've just used a generic blank journal here. And this is also on the same date. So this is June the 30th. And what is the amount that we have paid in? We've paid in an amount of 6,250 Rand. So let's go and credit our bank account there, 6,250 Rand. Okay. Right, ladies and gentlemen, this is actually just one journal entry. The blank journal entry that I just copied from another form has got these lines that indicate the end of a journal entry. But this is actually still one long journal entry, right? One long journal entry. So we've recorded the movement of cash. What is our next step? We record the movement of cash. So our final step now is to calculate and record any profit or loss on the exchange of assets. Now, how do we go and do this? How do we go about doing that? Ladies and gents, it's simply a matter of making sure that this one long journal entry balances. Does it balance? So that is what we must now go and do. You know, I say this a little bit tongue-in-cheek, but very often it's quite true in financial accounting. If you've got a long journal entry and it doesn't balance, then sometimes you just make it balance. You force it to balance, and then once you've done that, then you go and rationalize, or you go and think, what does that entry actually mean? So if you can add up for me, ladies and gents, what is the total on the credit side? Looks like it's 186,250, 16250, and the total debits on the debit side is 57 plus 29 gives us 76. So that's 176,250, 176,250, and this is 186,250. So we need a debit to make this balance. So what is the amount? If you can just deduct the one from the other for me. That 186,250 is the, what did I say, 176,250? Sounds like it must be. Thank you. Yes, yes. So the total credit is 186,250, and the total on the debit side seems to be if I add up correctly, 18. Is it also 6,250? So it does balance. Thank you, Randela. Okay, so the debit side is 186,250 in total, and the credit side is also 186,250 in total. So that means this journal entry already balances, right? It already balances. Does that make sense? So if it already balances, it means there's no loss and there's no profit on the exchange of assets here, right? If we had needed a debit to make this balance, if we needed a debit to make it balance, right? I'm saying theoretically, if we needed a balance, would that have then represented a loss on the exchange or a profit on the exchange of assets? If we had needed a debit to make this journal entry balance, would that then have been a loss or a profit on exchange of assets? Remember, expenses are debits, incomes are credits. So if we had needed a debit to make it balance, what would that then have represented? Profit or loss? Give me an answer. It would have represented a loss on exchange of assets, right? Thank you, Landela. Quite correct. Then it would have represented a loss. If we had needed a credit on this side, if we had needed a credit to make this global journal entry balance, would that then have represented a profit or a loss on the exchange of assets? Then it would have been a profit, 100%. Okay. Now I've gone all this way and I still haven't answered Sipukazi's question. The question that Sipukazi had right at the beginning of this consultation session is how to drop the asset exchange account. Sorry for that, Sipukazi. We're still on our way there. Okay. So that is what the journal entries would have looked like. Now you must remember the exchange account is what we refer to as a suspense account. A suspense account. What does suspense mean? If you go to suspense movies, a movie that is all about suspense, you're waiting for the pin to drop, you're waiting for something to happen, right? So a suspense account is an account that is waiting for something to happen, and once that something has happened, that account ceases to exist. So it's basically a temporary account. It is just there for the duration and for the purpose of the exchange. So it doesn't start with any opening balance. It doesn't end with a closing balance. It merely exists for the exchange of the assets. So now let's go and do that asset exchange account. And remember, this now contains the contras. So for every account that we debit, if we debit that account, it means the asset exchange account will contain the contra. If we debit that account, the asset exchange account will contain the contra. If we credit that account, the asset exchange account will contain the contra. If we credit that account, the asset exchange account will contain the contra. So now let's go and complete the asset exchange account, which was in the first place what Sipukazi asked. Okay, so I've typed in the dates there. So it's the 30th of June 2009. So here, if we start there, when we recognized the new asset, we debited that account. We debited the account called Nissan Delivery Van, or if you are using a manual system, you would just have called that vehicles, right? And then importantly, what does the account contain? The cost. Now, the asset exchange account contains the contra to that entry. So let's go and type it here on the credit side. So this will now be Nissan. If you are using computerized accounting system, what did we call it? A Nissan delivery van. Colon cost. And the amount of that transaction, what did we deem its cost price to be? You remember we said we had to estimate the purchase price. In this case, it is 157,000. Okay. Let me see if I can make that a little bit bigger like that. Okay. Happy so far? Happy so far? So that just contains the contra of that account. So now let's go to the next leg of journal entry. Here we've debited the accumulated depreciation on the old asset, right? So the asset exchange account will now contain the contra to that. So if we debit that account, it means we have to go and credit this account. So that will be Volkswagen Nivara colon accumulated depreciation. Right? That's an Nivara accumulated depreciation. The amount that we've taken out to get that balance down to zero was 29250. There we go. Okay, the next leg of this total entry is where we de-recognize the cost of that old asset, which was the Volkswagen Navara. So we credited that account. Now it means the contract to that entry will appear here in our asset exchange account. So this will be Volkswagen Navara. If you are using Pastel, and what does this account contain? It contains the cost. And what is the cost that the balance on that account that we are writing down to zero? 180,000 rands, right? And then lastly there, we've recorded the movement of cash. So we credited our bank account. This asset exchange account contains the contract to that. So there we will have a bank account. And the amount that we credited the bank account with was 6,250 rand. So let me just go and type the dates in as well. That was also the 30th of June. That was also the 30th of June. Now it's just a question of balancing off this account to go and determine whether you have a profit or a loss on the exchange of the assets. Now, as we've seen already, if we add up this debit side, it comes to 186,250. If we add up the credit side, 250, 9 plus 7 is 6, 5, 6, 7, 8. That also gives us 186,250. So this account already balances. So it's now just a question of closing it off. If we needed a debit or a credit to make it to make this balance, remember, it then will not be a balance that you carry forward. It'll either be a profit or loss on the exchange of the assets. So it had been coming from this side of the asset exchange account. If you need a figure there to make a balance, it means it'll end up on the credit side of the destination account. On the credit side of the destination account, which means that will then be a profit on the exchange of assets. Or if you need on the credit side of the exchange account, if you need a credit there to make this account balance, it means that credit is going to end up on the debit side of its destination account. Right, it's going to end up on the debit side of the account where it's going to be posted to, which means that will then be a loss on the exchange of assets. Phew, I didn't think it's going to take that long, but let's just find out from CPUT. Does that help, CPUT? Or is there anything else that you want to ask? I know there were a few other questions that we must still address as well. CPUT, if you can just tell me, is there anything more you need to know there? Or are you happy? You can give me a happy face or a sad face. If it's a sad face, then you'll have to ask more questions. If it's a happy face, then you don't have to ask more questions. You're happy. Oh, very good, very good. Okay, so that is one question answered. There was another question. Let me just go all the way up. Kino, you wanted to ask something about the PPO note. Okay, what do you want to ask? Would you like to ask it in person or would you like to type? What is your question? Kino? I would like us to do a question there, a question on the PPE note. Okay, I'm not too sure whether I actually have one handy, but you must now give me a few minutes. Let me see if I can find one.